Today, Wall Street is glowing green. The Dow Jones, the S&P 500, and the Nasdaq have all closed at record highs, a signal that investors are full of renewed optimism. But what exactly sparked this rally? Why are traders suddenly betting big again after months of caution? Let us break down everything that happened today, from inflation data to Federal Reserve whispers, and what it all means for your money, your job, and the global economy. The S&P 500 ETF, SPY, rose to around 697, up 0.8%. The Dow Jones ETF, DIA, hit 472, up about 1%, and the Nasdaq QQQ climbed to 617, also up roughly 1%. These gains might look modest, but together they push all three major U.S. indexes to new all-time highs. Investors are celebrating across the board, from big tech to manufacturing, energy to banking. The biggest spark came from one word: inflation. The Consumer Price Index, CPI, for September came in cooler than expected, up only 3.0% year-on-year and 0.3% month-to-month. That's lower than what economists feared, and it's a clear sign that prices are finally easing. For the first time in months, Americans are seeing signs that inflation might be losing its grip. From grocery aisles to gas stations, the pressure is starting to cool. And that's good news not just for consumers, but for Wall Street too. Because when inflation falls, the next thought that races through traders' minds is interest rate cuts. Lower inflation gives the Federal Reserve a reason to ease up, maybe even start cutting interest rates sooner than expected. For months, investors worried that high borrowing costs would choke business growth and consumer spending. But today, those fears are fading. On the trading floor, the mood has flipped. Traders now believe that the Fed could announce a rate cut before the end of the year. That single expectation has sent a shockwave of optimism through global markets, not just in New York, but in London, Tokyo, and Frankfurt. The FTSE 100 in the UK also hit record highs, mirroring Wall Street's energy. It's not just macroeconomics. Big tech is back in the driver's seat. Companies like AMD, IBM, and NVIDIA are all posting strong numbers, riding the wave of artificial intelligence and semiconductor demand. Investors are also rotating back into tech stocks, the very same companies that fueled the post-pandemic boom. That's why the Nasdaq led the charge today. IBM's surprise earnings beat boosted investor confidence, while AMD's stock jumped after analysts predicted stronger chip sales for 2026. Meanwhile, the broader S&P sectors, from finance to industrials, are also showing gains, proving that this rally is broad-based, not just a tech bubble. It feels like the market can't lose. But behind the cheers, some analysts are warning this rally might be running too hot. The S&P 500 has now risen more than 20% this year, and valuations are getting stretched. Some fund managers are quietly trimming positions, betting that a small pullback could come before the next leg up. Still, for now, the sentiment is overwhelmingly bullish. From hedge funds to retail investors, everyone's leaning into the rally, convinced that a new bull market has begun. So, what does this all mean for you? If you're an investor, your portfolio likely just got a bump. If you're planning to borrow, lower interest rates ahead could mean cheaper mortgages, car loans, and credit card rates. If you're a saver, the flip side is that yields on savings accounts might fall. For businesses, rate cuts mean cheaper expansion and hiring, which could strengthen the job market. And for the global economy, the U.S. rally sends a signal. The world's largest economy is stabilizing, and that gives hope for global growth heading into 2026. But the story isn't over. All eyes are now on the Federal Reserve's next meeting. Investors will be watching every word of the Fed's statement for clues about timing and magnitude of possible rate cuts. The next CPI report in November will be critical, confirming whether inflation truly continues to cool or flares back up. If inflation holds steady, the market's dream scenario, rate cuts and growth, could become reality. If it doesn't, the current rally could face turbulence. So, as Wall Street celebrates record highs, remember, markets move on emotion as much as numbers. Today's optimism may mark the start of a new financial chapter or just the calm before another storm. What do you think? Is this the beginning of a true bull market or just another short-term spike? Drop your thoughts in the comments and don't forget to like, subscribe, and stay tuned for tomorrow's update. This is your daily U.S. finance story, October the 25th, 2025.